Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's June 11th. Hope you guys are having a great day. We got a couple items here on the economic calendar. Like every Thursday, we get the initial jobless claims. So last week, data that was reported for the previous week, it came in at 1.9 million. Forecast for this week was 1.58 million. It came in a little bit lower at 1.54 million. So we're still seeing this trend that it's declining each week, where we're getting fewer and fewer people applying for unemployment for the first time, jobless claims. And when you look at the continuings, we're seeing that come down a little bit as well as people go back to work, which is a good sign. Now, we also got the producer price index. This is a guide that tells us the inflation on the wholesale side. So it doesn't get a lot of respect because it doesn't really influence the markets that much, but primarily because if their margins shrink or their costs go up, they don't always pass that on to the consumer. So, and that's what we really kind of look at inflation. That's the inflation data we really look at. So, as a result, in April, we saw the headline number at 1.3% drop. It called for 0.1% increase for the month of May, and it actually jumped up 0.4%. So its year over year went from a decline or minus 1.2%, but improved to 0.8%. So we're getting closer. So we were getting some deflationary data on the headline number. But now, when you strip out the food and energy, the variables that we can't control, we get what they call the core PPI, and this is what we really put our weight into. On this one, it was a minus zero point 0.3 percent in April. Forecast was gone minus 0.1, and it did drop 0.1% in the month of May. And it's dropped from its year over year dropped from 0.6% down to 0.3%. So we're almost to almost no inflation in terms of wholesale side. So let's jump ahead here to the headline news. Stocks are way down this morning. Dow is down over 1,400 points so far this morning. Basically, kind of stemmed from yesterday's comments from the Fed. Basically, the Fed said that they expect rates to remain lower for quite some time. They're going to continue with their mortgage-backed securities. They believe that GDP is going to be in the negative territory around 6.5%, and meanwhile go up next year and the following year a little bit. But it won't be enough to really make up for this year. And unemployment will probably be right around 10% this year, and then work its way down a little bit. So it's going to take a lot slower of a turnaround than what people or the investors were thinking. And I think we've been talking about this quite some time, that they've been kind of this euphoria that they were just kind of thinking things are just going to quickly turn around, but it's going to take a little time for this to come around and rebound. There are small businesses that are closing and won't be able to return. There's even some large businesses. I mean, here in California, we had a buffet company that basically announced that they won't be reopening 92 stores. So that's a pretty large company with a lot of people that are affected by that. So there are going to be a lot of adverse effects that this lockdown had um, put on the economy. So we'll have to kind of wait and see. So that's really the big thing. And then coronavirus, even though we're getting some states where they're declining on the numbers, there are a few states that are rising a little bit. So there's concern about a possible second wave, and so that's kind of where things are at with that as well. So let's see how this is playing out with the bond market. Bond market is doing quite nicely. Yesterday we had a huge day. We rallied and closed up about 41, 42 basis points. Broke about the 50-day moving average, which we've been wanting to do for quite some time. Right now, we were up much higher, as you can see with this wick. Right now, we're about 13 basis points higher. So we will see a better improvement in our rates so far and today, and that's obviously a good sign. This 50-day moving average, assuming we stay above here for the next few days, will turn into a floor of support. So this will act as a support level for us to reach higher. And then on our counterpart, the yields, because they talk about rates being low for some time, they've been kind of dropping, and right now are dropped below their couple levels here. And right now it looks like they're sitting right about the 50-day moving average, just under 6 point or 0.68, just under that. It's like 0.677 or some of that. So in any case, again. good news for bonds, not so good news for stocks. But again, as we talked about, stocks have been kind of going up and up and up on more uh, excitement about things or their optimism. But again, those weren't logical or data driven. So in any case, this is helping out mortgage-backed securities, and those who are looking to refinance and looking to buy will be able to take advantage of those low rates. So, speaking of such, if you guys are in California looking to buy or refinance, please reach out. Love to be able to help you guys out. Either direct message me or email me. I'll put in a place in the description where you can, if you want to start answering a few questions, we can reach out, touch base, and also if you have documents you want to upload, go ahead and do it that time as well. But in any case, we'd love to talk to you about your situation. We've created in the past quite a few different scenarios where we've helped out people with divorce situations, to different college planning situations, to early retirement or financial freedom strategies we've developed and be able to help clients with, to helping people get into their first home or even downsize. You know, a lot of the various avenues we've helped people out with. So we'd love to be able to talk to you about yours and how we can help you. All right, you guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye bye.